Alright, this is a trend review of the Dow. There were trades today. Um, anyway, it was in a downtrend and did all this crap, right? So down, 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 down. And then over here where it says weakness to strength, that was the first trade. And basically it rallied and then it pulled back. So the pullback was obviously like the entry because, you need the rally. So you could enter here. But this trade, it really just bounced and it was a counter trend, and it's either counter trend or ABC correction, whichever one. I don't really care what to call it, but the point is, like, you don't know which trades are going to be big moves or which trades are not going to be big moves. So in this case, you basically had a ABC or a counter trend to test this area, and selling came in very strong. So this trade was either a loss or a break even, depending on where you put your, if you put your order here, ding, as soon as it comes up here, there should be a break even, and you break even basically just paying broker fees, or just the transaction fees. Then it went down and again got another signal right here where it goes from weakness to strength. And these signals, like, I do not believe in mechanical signals. I don't believe in like any signals, but this is something I devised, which is based on factual data. Like, it will identify points where it goes from weakness to strength. So for some reason, I'm more, when you create something, it's different than using somebody else's tool where they say, oh yeah, I take the 5 period and then the 10 period and they cross, and that's, I don't know. But over here, it goes ding, ding, and here again there's a weakness to strength. And this is based off of pressure, real volume, real data, real price action, price, volume, all of that. So this is why, even though I don't like mechanical signals, I am partial to stuff that is based off of factual data that is not massaged in any way. All right. Um, no derivative, no averaging and stuff like that. Although some of it for some people works, for me, I don't know. Anyway, it rallies, bang, you have weakness to strength indication. And this is apparent because they went down on 259 and went up on 238. Even though 238 is less than 259, there's definitely covering here. They're covering. This is not a small amount. And over here, even though this looks like an ABC correction, it's actually preliminary demand, meaning this was the early buying before the climactic move. So that's why there was a turning point here. Anyway, it goes down, and 238. Now you just have to wait for supply to dry up, and it dried up, went from 259, and then you had 238. Now watch as supply dries up. 259, 56, 43, and 47. Okay, so you have it going basically, I guess 47 is a little bit more, but it went from 259 all the way down. Okay, and on the buy side, 238, 65, and then 125, and the trend basically right here started making high. So this 125 up and then 47 down, that's where like the switch occurred, because you have rally with good volume and a pullback on less than half the volume. So there was a switch, like, I don't say switch, but definitely a turn. Where exactly is the turning point? It's not obvious, but the turning point was here. Some may also say that right here is also, excuse me, is also like a successful test or could even call this your last point of support, because that's what it is. And if you look closely, you're gonna notice that typically you have hinges here and here. If you've seen the video, you know how important this type of action is. You know, Wyckoff in one of his studies, not one of his studies, multiple studies, identified the importance of hinges and also what he called a wide base of support, a wide range of support after the rally. I'm not talking about the cause. The cause is different. I'm talking about a rally and it pulls back and then starts forming a little base. What he called, I think he just called it a wide base of support. Basically, he said, after a rally on the pullback, you want a wide base of support. Okay, meaning it shouldn't be like 1 or 2 bars. Over here, you have 1, 2, 3, 4, 5, 6, 7, 6 or 7 bars here, so it's pulling back, moving sideways. It's forming some type of wide base of support, which is different than the cause or like a range. It's basically action on the pullback, and that's occurring here. All right, that's not really that wide over here. It's 1, 2, 3, 4, 4 or 5, but over here, that type of wide base. Maybe I'm not saying it correctly, but I think you get the idea of what type of action needs to occur on a pullback. In any case, this area here and here, very key, very important on when it pulls back and starts moving sideways like that. Pull back, start moving sideways. All right, this type of, I just call it a hinge because it's a hinge, but anyway. So over here was the turning point, and look at the went up, straight up. So this was the first trade, which if you put your stop in this area is a break even. But even if you like get stopped out or it goes up, who gives a shit? It's just very low risk trade, and that's fine. Like you can withstand that. And end of the day, so long as you get this move, then in the context of this type of move, a little stop out of like 20 ticks is meaningless. You know, because you don't know which ones are going to work and when they're going to work. That's the that's how that's the issue with people that are trading. They're looking for certainty, but the markets will not tell you when they're going to move exactly and how far they're going to move. They just will not. It's very hard, and you don't know which ones are going to work, which ones are not going to work. You only know that you're going to get both wins and losses, and your psychology needs to be able to, handle that, because over here, if you got stopped out, and then over here, a lot of folks may not get in because they're feeling quote unquote pain from being stopped out from the first time. So you don't know which ones are going to work. You just hit the buy. If it works, next, hit the buy. Either works or doesn't, and you got to just be able to do that only when you see your edge, and whatever it is. There's so many edges, it's absurd. Over here, once it went down, went down on 56. Look at the volume up. Relatively speaking, 238 relative to 56. That's like 1/4, almost 1/5, but around 1/4. All right, a little bit less, but actually about 1/4. Over here, if you're just looking at this big print, you may not see the accumulation that's going on inside the range of the climax, but pay attention, you see it. Now, that's one thing, right? The second thing is, it's very important to, when you're trading an index, have something to compare it to. All right, now a lot of folks use the leaders. A lot of folks use, they trade the S&P, look at the NASDAQ. or trade the S&P, look at the leaders like, I don't know, Apple, Facebook, FANG, etc. Or they might look at other indexes, or they might look at leading stocks of the day. So they might find the leading stocks, which are totally different than like the large cap. They're more speculative or more fundamentally strong. So they might start looking at those types of stocks. They might start looking at internals and seeing, oh, let me see if market quote unquote breadth is going up. What are the majority of stocks doing, advance versus decline, the volume coming in, etc. Well, one of the method is just to take a look at a synthetic index, which is what I devised. Now take a look at this. As this thing was going up on red, right, 45 minutes, it's still red, but I had very strong indication that when it went over here that it was going to fly. All right, now you'll see that 70-minute here. Now you'll see the synthetic index is telling you, let me see where the hell is. I'm trying to both of them on the same chart. Over here, right? It's going down. Look at this, 25 up, but look at the distance. Ding, 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 and then it's going up. So the synthetic index is showing you very clearly around 9:30. Let's say about 9:30, strong rallies, holding the pullback and going higher, right? 45 minutes, 25 minutes, but not just the time. The volume on this, where the hell is the volume? I lost the volume. There it is. It goes down 2000, come up on 2000, but I have to verify these. Anyway, you can actually just see the strong wave, right? See the strong wave pull back halfway back right around here, and then it's continuing right here, right? It pull back on zero. So pull back on zero, supply is out of here. Right now, so 9:30, you see that it's getting ready to rally. It's very, very, very apparent on the synthetic index. So 9:30 is right around here. So the Dow was actually trailing the synthetic index. The synthetic index tipped me off. Trying to get them both in this. Let me see. Watch the chart marker. You see that from here to here. Let me use the arrow. We're here, right? 45 minute, 238. But look at the synthetic index. Where the right here. It makes a higher high. And on good volume, decent amount of time, and it goes from red to white and makes a high here and pulls back, holds the low, it goes positive here. So the synthetic index here is telling you something, and even if you're not convinced because of all whatever over here, this shit right here, see this? That's it. It's a wrap. Okay, you're out of the base, out of the range. Clean breakout, lack of volume on the supply side. You see? Where's my arrow? Arrow. 0. Arrow. 0. See that? Test, secondary test, or third test, whatever. Rally, pullback, ding, 0, 0, rally. So now, where is, can I do it? Anyway, so above, I didn't set up all my buttons, but above this area of resistance, okay, a clean breakout. So over here on the Dow, you have rally, pullback, all that signal, and then you have this rally. So even though this doesn't look that strong, you get the cue from the synthetic index that they're going. This is the biggest volume. This is the biggest volume, good amount of time with no selling pressure in the background. This turning point, or the last point of what was it, last point supply, or the whatever you want to call it, is right here. Bye bye. That's it. Supply has dried up. And strong breakout on big volume, 45 minutes. That's the most amount of volume you see, right? So this price volume breakout, everything is bullish. So even though over here it doesn't break out that hard, the synthetic index is telling you that they're gonna go, and it's just a matter of time for the Dow to go crazy and get in line, right? And that's what happened here when it did this move. It did this move because they were gonna catch up. Dow was gonna catch up, right? Because it basically has Apple and all those other stocks in it. It's just a matter of time, and the synthetic index also went. So lesson learned. Lesson learned. A, you don't know when you're gonna go from weakness to strength, but whenever you do, you have to take it and whatever. And the last piece of the puzzle was the high time frame on the hourly over here. This is clearly a resistance level. We were around here when all of that stuff is happening on the 5 minute. We're around here. So all it did was test the breakdown. It was a downtrend, and it was ready to rally and test the breakdown. So this test of the breakdown was that big move on the 5 minute chart, you know. Um, and that's why I say, like, take a look at the you have to know the levels of the higher time frame. All right, most of the time what they're gonna do is take price on the lower time frame and go to untested areas on the higher time frame. Now, how that turn occurs, if it's a turning point or some other thing, a myriad of you know myriad of ways. But you figure, Friday they're gonna cover. It's all the way down here. It's definitely oversold, and that's what gives you the target. All right, that's all, folks. Have a good weekend.